Hi, welcome back to my channel. Today, we're going to go into the crazy world of Medicaid long-term care asset limits. I'll go over some of the misconceptions and fears people have. I have assisted over 200 families to meet the qualifications for Medicaid long-term care. However, I'm a consultant that guides families through the process. I am not an attorney. So grab a pen, take some notes. When it comes to planning for long-term care needs, understanding Medicaid long-term care asset limits is crucial. It's essential to know how much you're allowed to have in assets while still being eligible for Medicaid benefits. Without this knowledge, you might end up losing control over your assets or being disqualified from receiving the care you or your loved one needs. Assisted living can cost seniors between $6,000 to $9,000 a month. Of course, that depends on the level of assistance that is needed. But a nursing home is over $15,000 a month. That's in my state. With costs like that, your retirement savings will be depleted very quickly. So no wonder so many are stressed and don't even want to talk about long-term care. Many people struggle to navigate the Medicaid asset limit. And it's no wonder. There's lots of misinformation out there, especially from friends or your neighbors who know somebody or heard about someone's experience. You might have heard that you'll have to spend down all your savings or sell your home to qualify for Medicaid. Those fears can be overwhelming, and it's hard to know where to turn for accurate information. One common misconception is that Medicaid is only for low-income individuals. But the truth is, anyone can need long-term care at some point in their lives, regardless of their income level. And when that happens, Medicaid can be a vital source of support. However, the asset limits can be a major hurdle for many people. It's not surprising that people get frustrated when trying to figure out the asset limits for Medicaid. The rules can be complex, and it's hard to know what counts towards the asset limits and what doesn't count. But understanding these limits is a key to creating an effective long-term care plan. The asset limits vary from state to state, so it's essential to know the specific rules in your area. Some states have higher limits for couples, and some have more generous exceptions. Understanding these variations can make all the difference in your long-term care planning. The reason that the states have asset limits is because so many people need help that the government can't afford to pay for everyone who needs the help, especially if they have means to pay for their own care, even if it's just for a little while. So we're going to talk about the asset limits today. Many people believe that the government will take everything, or they say I make too much money to qualify for Medicaid. I suggest you watch my video on income to learn about the amount that the amount you make might not be what's preventing you from qualifying for Medicaid. The asset limits can be very confusing. Your primary home, it's exempt, and one vehicle is exempt. The value of those items does not count towards your asset limit. The asset limits change every year. If you're married or a registered domestic partner, there are ways that assets can be preserved. In my video on getting organized, I review how important it is to gather your documents. One reason that is important is because the document will tell you what it is and who owns it. So my client Earl came to see me with his documents in his hand. He was not a computer guy, and his wife paid all the bills. That was until the day she had a stroke and ended up in the hospital. Now, Earl had to take over. There was a deposit that went into his bank account, and he did not know where that deposit came from. It happens all the time. One spouse is aware of where all the money comes from, and the other one does not know. This deposit was from a 401k that his wife owned. he didn't know she had. And as it turned out, his wife had 2 401k accounts that totaled $250,000. The 401k statement says right on it that it is a retirement account. It has his wife's name. So from that, we know who owns it. And in this case, it was Earl's wife. It's not uncommon for couples to believe that because both of their names are listed on a brokerage account, that the funds belong to both of them. However, it depends on what is in that brokerage account. You need to ask yourself, where did the funds come from that went into that account? If the funds came from work and you transferred your retirement account out of the work brokerage firm into another account like Edward Jones or Fidelity, the funds are still owned by the person who earned those funds. Funds that are earned from working are called qualified funds, which means they have not been taxed. So back to the asset limits. The applicant or the person who is ill is allowed to only have $2,000 in assets. That is how much money can be left in the bank after the bills are paid, not how much money they make. I believe that the $2,000 limit is nationwide, but check your state to be sure. The spouse has a different asset limit. If the spouse's limit is, for example, $70,000, the state wants you to spend down the excess assets down to that limit. However, there are ways to preserve assets above that limit, and it's legal. So let's get back to Earl. If Earl's wife has $250,000 in her 401k accounts, will she qualify for Medicaid? Not in their current situation. She's only allowed to have $2,000. However, since Earl has a current power of attorney document for his wife, he can liquidate her 401k, pay the taxes, and then those assets can be transferred to Earl. That's legal. Earl can preserve the assets with a Medicaid compliant annuity, or he can purchase funeral or cremation plans. He can repair his house. He can pay off his house or some other debt. Earl has options to use those funds or preserve the funds over the limit allowed by Medicaid. But that Medicaid annuity is very strict. Be careful with it. But that's what we did. We helped Earl preserve those assets. We preserved them for him, and we could not have done it without a power of attorney. Preservation of assets for the healthy spouse is very important, and they can be preserved, and you can check your state for their limits and compare them to your limits. If you're curious what types of accounts or of assets count towards it, Medicaid, I'll have a link in the show notes. But don't let misconceptions and fear hold you back from creating a plan that's going to work for you. Thank you for watching. I hope that I helped you. If you have any experiences with Medicaid asset limits, share them in the comments below. If you want to learn more about Medicaid and long-term care planning, check out my other videos for more information. Remember, I'm a guide. Your situation might need an attorney. Not all elder law attorneys understand Medicaid law, and that could cost you thousands. So do your homework. Watch the video I have on income limits and the ones on getting organized. They're full of important information and concepts that could really help you go through this process. In the meantime, if it's necessary for you to watch this again and take notes, do it. It's very valuable information. I have more videos coming, and if this is helpful to you, then subscribe and so you can keep track of the videos I'm posting. Thanks for watching. I'll see you again next week.